The stunning collapse of crypto giant FTX is one of the biggest failures in financial history, and it may determine the future of the crypto and digital asset industry. Joining me now is our friend Rubicon Crypto CEO Greg Johnson to break down this story and share his perspective. Greg, how did this happen, and how does it have any impact on the rest of the financial world?
Well, Jeff, thank you for having me, and this is really an important story for everybody. You and I have been talking about crypto and digital assets now for a little bit over a year, and in an industry filled with headlines and sensational stories, this is easily the biggest story in the history of the industry. FTX is one of the high-flying crypto exchanges, one of the biggest names in the entire industry. And their CEO and founder is a celebrity wonderkind in the financial world. He was a gifted math prodigy from MIT. He was somebody that was recruited by some of the top financial institutions, started his own firm called Alameda Research, and then formed a crypto exchange called FTX. And that's where the plot really starts to get murky and thick for a lot of people. This collapse was stunning. It's stunning because he was a celebrity in the crypto industry. It's stunning because he was also a favorite in Washington, D.C. He was one of the people that was calling for regulation, a subject you and I have talked about a great deal. And so last week, when news started to break that actually the reserves were shaky, a competitor came in and started the ball rolling towards the ultimate collapse of the exchange.
So we're seeing some people who believe that there is a correlation here to the global banking crisis of 15 years ago. Do you think that's a fair analysis, or is that reaching?
You are hearing it, and I think it's pretty logical for people to make that conclusion, but I would ask folks to wait before they tie those two together. You know, Lehman Brothers was the tipping point for the global banking crisis. As of right now, I want to assure everybody that whatever concerns you have about the crypto industry, it's within the crypto industry. The contagion, as they call it, is not outside into the global banking system as of right now. But what we can also say for certainty is that this is going to hurt a lot of people that work directly with FTX, and it's also going to have a broader impact on the crypto and digital industry for the months to come. There's a silver lining, though. One of the things you and I have talked a lot about was the need, especially for our Atlanta businesses, because Atlanta stands to benefit tremendously from the emergence of blockchain and fintech and how they all merge together. The silver lining is this collapse will ultimately bring in swift and meaningful regulation that will bring even more capital and more people into the industry. And I think that's an important thing to note. And if I may, many people are talking about the sensational pieces of the story because it's beyond just the crypto news, if you will. And this is not about young people having too much too soon. The adults were in the room. And not only that, the adults not only were in the room, Jeff, they helped to build the house and they furnished it as well.
Money people hate regulation. So when I hear you say regulation, the bells kind of go off in my head. Is that wrong?
I don't think that it's wrong to have the bells go off, and you're right, they do hate it. But regulation is something that has allowed the United States to be the absolute crown jewel of the global capital markets. Without a regulated financial system, with no regulation whatsoever, the U.S. would not be the dominant player that we have become in the financial markets. And so we need sensible regulation. But I fear for the crypto industry, short term, the regulation will be heavy-handed. And it's really because the industry has shot itself in the foot with this collapse of FTX.
So when you talk about free range, that's good for eggs and chicken, not so much for those who have a lot of money.
It's not so much. And again, I think this story is just beginning right now, Jeff. We're going to be talking about this for months to come. There's going to be a lot of easy, salacious headlines about what was going on and, behind the scenes and so forth. Remember, you and I joked even around the Super Bowl about how Tom Brady, from where I used to grow up in Massachusetts, one of our favorite heroes up there, he signed on with FTX. And I said to you then, and I'll say it again, that was everything that was symbolically wrong about crypto and digital assets, because it gave the impression that there wasn't risk. It gave the impression that this wasn't an emerging industry. And it doesn't mean it's bad that it's emerging. It doesn't mean it's bad that there's volatility or risk. It just means you have to be sensible.
Been a tough year for Tom Brady.
Oh, my goodness.
How will this impact the future of the crypto industry from what we're talking about today?
Well, I think we're going to see impact in the crypto industry to be broad and far. We talked about regulation already, but short term, we're likely to see other companies, most notably BlockFi. You know, this FTX fellow and its founder, Sam Bankman-Fried, he was the knight in shining armor for a few months earlier this year when other companies were struggling. His firm, along with FTX, came in to bail out many other projects that got themselves in harm's way. And unfortunately, many of those projects that thought they had received a lifeline are finding that that lifeline has been cut. Most notably is a company called BlockFi, a pretty large player. They are going to be in deep trouble, and there are already rumors for bankruptcy there too.
Greg Johnson, the CEO of Rubicon Crypto. Thanks so much, Greg. As always, we appreciate the information.
It's a pleasure, Jeff. Thank you.